Welcome to The Explainer. Today, we are diving into the really high-stakes investment story of Turning Point Brands. It's one of those fascinating tales of absolutely explosive growth that's kind of balanced on a knife's edge of risk.
Okay, so first things first, let's get a sense of scale here. We're talking about a market cap of around $2.5 billion. So Turning Point Brands, or TPB as we'll call it, is firmly in the small cap category. And that's a really key detail because it often means there's a ton of room to grow, but it can also signal a much bumpier ride for investors.
Now, get a load of this number. Over 600%. Whoa, that's not the company's total growth. No, that's the absolutely mind-boggling year-over-year expansion of just one single part of their business, a segment they call modern oral. And yeah, that means smoke-free nicotine products. This right here, this is the rocket fuel propelling the entire TPB story. So who exactly is the company behind these crazy numbers? Let's get our bearings for a minute and really understand what Turning Point Brands is all about. Okay, so TPB is basically a company that has one foot in two totally different worlds. On one side, you've got the traditional old-school tobacco products that have been around forever. And on the other, you have this super fast-growing, high-tech market for modern nicotine alternatives. It's a classic mix of old school meets new school. And this chart just lays it all out for you perfectly. You've got the legacy brands, right? Zig Zag, everyone knows them for rolling papers, and Stoker's, which does smokeless tobacco. But the slice of the pie that's grabbing all the headlines is modern oral. That's the engine. That's where that incredible 600+% growth is coming from. So what's the optimistic take on TPB? Why are people so excited? Well, the bull case is really a story of pure, unadulterated momentum, and it all centers on that one explosive segment. And let's be super clear here. While TPB's old brands are stable, the real investment excitement, the buzz, it's not about them at all. It is almost entirely focused on the company's massive success with one specific product, those little smoke-free white nicotine pouches. And this growth isn't just happening in a vacuum. It's so powerful that it's lifting the whole company up with it. We're talking total revenue up over 50% year over year to more than $435 million. I mean, come on, that is some serious top-line expansion. Now, this isn't just happening by accident. Management has a really clear three-step playbook to pour gas on this fire. First, invest in U.S. production to get those margins up. Second, expand the sales team. And third, broaden their retail footprint to get these products in front of way more people. Look, this kind of explosive growth is exactly what investors dream about. But it also brings up a really crucial question. When a stock climbs this fast, is the market getting ahead of itself? What are the hidden risks we're not seeing? Okay, time to look at the other side of the coin. This is where that high-flying growth story could meet some serious turbulence. The bear case really boils down to three things: valuation, dilution, and regulation. The biggest risk, by far, comes down to valuation. And think of it this way. It's a great analogy. Buying a high-growth stock is like paying a huge premium for a house because you're betting it's going to be in a much hotter neighborhood tomorrow. You're not paying for what it is today, you're betting big on the future. Now this slide, this shows the two sides of TPB's valuation perfectly. The trailing PE, which is looking at past earnings, is a sky-high 222. I mean, that is incredibly expensive. But then you look at the forward PE, based on future estimates, and it's a much more reasonable 35. That huge gap means the current stock price is basically banking on massive future growth. The whole investment thesis hinges on the company delivering that. No pressure. And beyond that valuation risk, there are other pretty significant red flags to think about. For one, the company has a program that could dilute existing shareholders, meaning your slice of the pie gets smaller. Then there's the fact that the entire nicotine market is under a regulatory microscope, always. And finally, their old legacy brands like Zig Zag could just see demand shrink over the long term. All right, so let's quickly put some hard numbers to this story by taking a peek at the company's financial health. What's the balance sheet telling us? So, a look at the balance sheet shows, well, kind of a mixed picture. On the one hand, they have a really healthy cash pile of over $200 million to fuel all that growth. But on the other hand, they're also carrying $300 million in long-term debt. And that tiny dividend yield, it makes one thing crystal clear. This is not an income stock. Not at all. So let's pull all of this together.
We've seen the incredible rocket ship growth, and we've seen the pretty significant risks. Now let's really dig into what kind of investor might be drawn to this story and who might want to just steer clear. So who is this stock for? Well, if you're a growth-focused investor, somebody who's comfortable with a lot of volatility, and you're really interested in this niche market, TPB might be pretty compelling. But on the other hand, if you're the kind of person who prioritizes stability, income, and you're really nervous about high valuations and regulatory risks, yeah, this probably isn't a good fit for you.
And ultimately, that leaves us with the final, big, provocative question. You've got a company with one segment growing at this just astronomical rate. So, is this a true ground floor opportunity to get in on the next big thing in consumer nicotine? Or is it just a hype train with a stock price that has already factored in years of perfect execution, leaving absolutely zero room for error? That's the billion-dollar question for anyone looking at this stock.